Malaysia has always been quietly building the pieces of a modern financial center, and the truth is that the country may already be closer than most viewers think to becoming Southeast Asia's next real financial hub. The story is simple: location, cost, regulation, talent, specialized strength, and a deliberate push in infrastructure and policy that together create a practical reason for global banks, asset managers and fintech firms to take Malaysia seriously. Malaysia sits where Asia's big flows cross. Kuala Lumpur is in the middle of Southeast Asia, within comfortable flight time to Singapore, Bangkok, Jakarta, and Manila, and a standby hub for business travel between the Middle East, China, and India. That geography matters when decisions are taken about where to put regional teams for markets that need local language skills, cheap but skilled operations, and regulatory certainty. The second truth is cost. Singapore today is world-class but extremely expensive. Rent, wages, and corporate costs there are a major line item. Malaysia offers comparable English language skills, comparable time zone convenience, and professional infrastructure for a fraction of the price. When a global bank can place a regional treasury desk, wealth operations team, or a compliance back office in Kuala Lumpur instead of Singapore and save 30 to 60% in running costs, those savings compound quickly and change long-term decisions about where to base operations. The third truth is Islamic finance. Malaysia did not stumble into this advantage, it built it over decades. The country is a global leader in Islamic finance, with the regulatory frameworks, market institutions, and product depth that other countries still struggle to match. Malaysia has been the world's top issuer of sukuk in many recent periods, and Malaysian institutions have deep experience in Sharia-compliant banking, takaful and sukuk structuring. For any global asset manager, commercial bank, or sovereign wealth fund that wants access to halal products or to tap Muslim-majority markets, Malaysia is a ready-made bridge. That specialization is not a niche, it is an expanding market with real capital behind it. The next truth is clear policy moves and deliberate places to host finance. Tun Razak Exchange, known simply as TRX, is not an advertising slogan. It is a purpose-built 70-acre financial district in the heart of Kuala Lumpur designed to be a regional business and financial center. TRX has attracted major tenants and set the tone for a modern financial campus with office towers, wealth centers, data connectivity, and space explicitly for global banks and asset managers. When international firms see a recognizable financial district with flagship bank offices, dedicated infrastructure, and a policy environment that supports cross-border capital flows, international banks have taken notice. Major names have set up significant operations or regional offices in TRX, and that visible presence makes the location more credible for the next wave of firms deciding where to land. Another truth is the regulatory approach. Bank Negara Malaysia and the Malaysian government have been pragmatic. They have experimented with digital banking licenses, opened pathways for green finance and sukuk innovation, and adjusted tax incentives to make specific investment attractive. In 2022, the central bank approved a set of digital bank licenses, signaling that Malaysia is open to innovation in retail and small business finance. That decision created multiple new players focused on digital distribution and on serving consumers and SMEs with low-cost, scalable platforms. The presence of licensed digital banks matters because it gives regulators, banks, and fintech companies a live laboratory to build customer journeys, compliance models, and modern payment rails without forcing every new idea through the exact historical channels used by incumbents. The truth about talent is straightforward: Malaysia produces graduates who speak English and often Mandarin and Malay. That multilingual capability is rare and valuable when financial firms need staff who can handle English language reports, Chinese client relationships, and local market nuance. Financial training programs in Malaysia are robust. Local universities and private training providers work with banks and investment firms on practical skill sets. When a regional team needs negotiators, analysts, or client relationship managers who can operate across Asia, Malaysia's talent pool is a practical draw. Infrastructure is not a slogan either. Malaysia has been investing in digital readiness, data centers, and international fiber links. Good internet, established data hosting, and lower real estate costs for large floor plates matter for asset managers and fintech companies that need secure, low-latency operations. In practice, this means that a company can build a regional operations hub with reliable connectivity and pay less for the same physical space than in higher-rent cities. The green finance story is another fundamental. Malaysia has been active in green sukuk and sustainable finance frameworks. Governments and central banks globally are shifting capital toward ESG-compliant assets, and Malaysia's ability to combine green finance with Islamic financial structures is unique. That combination attracts investors who want to allocate capital with both sustainability and Sharia compliance in mind, opening Malaysia to a wider set of international institutional investors. Political stability and governance matter more than headlines suggest. Malaysia has had turbulent political moments in the last decade, but risk assessment is about trend and predictability. If regulatory policy, tax rules, and enforcement remain stable and transparent, international capital will reward that predictability. The Malaysian government has repeatedly signaled that attracting foreign direct investment and building a modern financial center are priorities. When those policies are consistent over multiple budgets and administrations, they produce a steadily improving business case for relocating regional functions to Kuala Lumpur. The practical advantage of time zone is underappreciated. Kuala Lumpur's time zone overlaps more business hours with both the Middle East and East Asia than many Western financial centers do. For asset managers trading across Asia, or for wealth managers servicing Middle Eastern and Asian clients, being in the Malaysia time zone reduces handoff friction. That operational convenience is one more pragmatic reason to choose Malaysia as a regional hub. The cost of talent and the quality of talent trade-off works in Malaysia's favor. Salaries are lower than in Singapore, but the skill levels are high. This is especially true in compliance, risk, legal and operations functions, all the people who keep financial institutions running. Putting compliance and control functions in Malaysia while keeping strategic client-facing teams in Singapore or London is a hybrid model many firms now prefer. It reduces costs while keeping client relationships close. Then there is the simple reality of market access. Malaysia itself is a sizable domestic market with a growing middle class, expanding household wealth and increasing demand for wealth management, retirement solutions, and retail investment products. That domestic demand makes Malaysia not just a place to run back-office functions, but also a real market for new products. Firms that set up regional operations here can test products with local clients before scaling regionally. The fintech ecosystem is maturing. Kuala Lumpur, Cyberjaya, and Penang now host startups that are building payment rails, lending platforms, compliance automation tools, and B2B financial software. Venture capital and private equity are following the startups that show product-market fit, and multinational banks are establishing partnerships with local fintechs rather than trying to build everything in-house. That collaboration speeds product launches and gives Malaysia a hands-on advantage in product development for the region. Consider also the role of tax and incentive policy. Malaysia offers targeted incentives for certain economic activities, including financial services and international companies that commit to local operations. Tax holidays, special corporate structures and incentives for green finance projects reduce the effective cost of establishing a regional base and attract firms looking for a predictable, favorable tax environment for specific activities. The combination of tax incentives and relatively low operating costs creates a durable financial advantage. Another practical point is the cluster effect. Once a few major banks and asset managers commit real office space, support services follow. Legal firms with cross-border expertise, specialized accounting practices, fund administration services, trust companies, and global custody services all establish teams nearby. This cluster of complementary services reduces transaction friction for any global firm expanding into the region and makes Kuala Lumpur more attractive compared to a city where those services are thin. The presence of global banks is not just symbolic. When multinational banks set up regional wealth centers or invest in landmark office space, they validate local infrastructure and governance. Global names on building directories and active investment in local operations signal to other institutions that the market can support large-scale, regulated financial activity. The fourth truth is about risk and diversification. Overconcentration in a single hub like Singapore creates systemic risk for firms and for regional economies. Spreading operations across multiple, credible locations reduces geopolitical and operational concentration risk. Malaysia is well positioned to be the second major node in a multi-hub Asia strategy for large financial institutions. Currency risk is real, and the Malaysian ringgit has had pressure at times, but ringgit volatility is manageable and, crucially, not unique. Many emerging market currencies fluctuate. Long-term investors focus on structural advantages, legal clarity, contract enforcement, depth of talent, and regulatory reliability. Malaysia scores well on many of these practical criteria. The educational pipeline is a structural advantage. Malaysian universities and polytechnic institutions are producing finance, computer science, and engineering graduates at scale, creating a steady pool of junior talent for banks, fintech firms, and asset managers. Firms that invest in local training programs and internships find it easier to scale operations than in cities where talent costs are prohibitive and churn is higher. Another truth is about regulation that enables capital flows. Malaysia has modernized parts of its financial rules, allowing more cross-border investment and product innovation while maintaining consumer protection. The central bank and securities regulator have been pragmatic in allowing modern instruments and in creating a clear framework for products such as sukuk, Islamic structured finance, and certain types of green bonds. For asset managers and fund administrators, that regulatory clarity matters more than marketing slogans. It determines whether they can structure a fund efficiently and distribute it across multiple jurisdictions. The physical and digital connectivity of Kuala Lumpur to global financial centers is robust. Malaysia has upgraded airport capacity, established better rail and road connections, and invested in fiber and data center capacity. For a global firm considering where to deploy an Asia operations center, the combination of travel convenience and secure data infrastructure is a business requirement. Malaysia increasingly meets both. The cost of living argument is not just for firms, it matters for talent retention. Skilled professionals can enjoy a high quality of life in Kuala Lumpur, good international schools, healthcare, housing options, and cultural amenities, at a lower cost than in Singapore. That keeps staff turnover lower and recruitment easier for mid-level and senior positions. The green and sustainability angle again returns as a business case. Many global investors now demand ESG-aligned investment vehicles. Malaysia's ability to issue green sukuk and to combine ESG frameworks with Sharia principles puts it in a unique competitive position for funds targeting both sustainability and compliance with Islamic law. That dual capability is attractive to Middle Eastern, Southeast Asian, and even European asset managers looking to diversify product offerings. Practical examples matter. When an international bank opens a flagship wealth center or when a reputable global asset manager lists a Malaysian domicile for a regional fund, this is not publicity theater. It is a signal that the necessary ecosystem, custody, audit, legal, fund administration, is present. Each new institutional arrival lowers the perceived risk for the next. There. Also momentum in private capital. Malaysian private equity and venture capital firms are growing, and regional investors are increasingly co-investing with global partners. That growth means more deal flow, more sophisticated investment products, and more experience in cross-border transactions, all of which feed into a deeper financial market. For corporates looking to list or to access regional capital, Malaysia's stock exchange offers a credible alternative to listing solely in more expensive markets. The capital markets infrastructure has been modernized, and the presence of international brokers and analysts means companies can reach global investors without leaving the country. The insurance and reinsurance sectors are developing analogous strengths. Takaful and conventional insurance products are expanding, and the insurance ecosystem's growth helps create more stable, long-term capital pools that are essential for a true financial hub. Even more tactically, Malaysia's government has created special economic zones and financial incentives focused on high-value services and knowledge industries. These targeted incentives reduce the friction of setting up regional headquarters, hiring expatriate talent and moving capital, practical moves that speed decisions for businesses that need regulatory certainty and financial predictability. Of course, Malaysia has challenges. Political shifts, bureaucratic bottlenecks, occasional policy uncertainty and the need for faster judicial and contract enforcement reform are real. But these are the sorts of policy areas where predictable, incremental progress by regulators and the judiciary can change investor perceptions. The key is not perfection, the key is consistent improvement and predictability. Countries do not become financial hubs overnight. They become hubs through decades of infrastructure investment, legal and regulatory refinement, talent development, and the steady accumulation of institutional credibility. Malaysia has built several of these elements already and continues to add missing pieces. That cumulative progress is the practical reason why firms are no longer dismissing Kuala Lumpur as merely a low-cost alternative. They are seeing it as a strategic regional node with a specific set of strengths: Islamic finance leadership, cost-effective, multilingual talent, pragmatic digital banking experiments, a purpose-built financial district, and tax and policy incentives that make long-term operations viable. In the next 5 to 10 years, expect to see more regional headquarters, more custody and fund administration capacity, and more institutional asset managers running real trading and operations from Malaysia. Expect also to see Malaysia deepen its specializations in green sukuk and in Islamic fintech, attracting investors who want products that combine sustainability with religious compliance. This is not a story about beating Singapore at everything. It is a story about complementarity and diversification. Singapore remains a top-tier global finance city for a reason, and many client-facing, high-profile financial services will stay there. Malaysia's emerging role is different but no less valuable. It is the cost-effective, skilled, regulated and strategically located node that global firms can use to balance costs, manage risk, and access a growing market for Islamic and ESG-compliant products. If you measure a financial hub by the presence of multinational banks, active capital markets, modern infrastructure, regulatory clarity, and deep talent pools, then Malaysia is building a complete dossier. If you measure by specialization and unique value propositions, Malaysia's leadership in Islamic finance and growing capability in green finance set it apart. The practical test will be corporate decisions over the next few years. Where will global banks pick for regional back offices? Where will asset managers domicile new funds? And where will fintech firms build scale operations? Each decision will be incremental, but each will add to a visible critical mass. For viewers wondering whether this is hype or substance, the evidence is in the balance sheets and in the offices. Global banks have made real estate commitments, regulators have issued licenses to digital banks, Malaysia has issued sukuk and green instruments at scale, and purpose-built infrastructure like TRX now exists to host these activities. Those are concrete facts, not slogans. The long-term winners will be countries that combine clear policy, good governance, deep talent, and practical infrastructure. Malaysia has chosen a path that builds on real strengths rather than relying on transient trends. For firms thinking strategically about Asia, Malaysia is not merely an alternative, it is becoming an essential part of a multi-node regional strategy. For professionals looking for stable, affordable career movement within finance in Asia, Malaysia offers real opportunities in operations, compliance, fintech, and Islamic finance. For investors seeking products that marry sustainability and Sharia compliance, Malaysia is increasingly the logical place to look. The last truth is simple: markets respond to predictability and specialization. Malaysia's combination of pragmatic regulation, cost advantage, talent, digital experimentation, and a strong position in Islamic and green finance creates a credible, durable case for it to be Southeast Asia's next important financial hub. If the country keeps improving its legal certainty, continues pragmatic regulatory reform, and steadily builds the professional services that support large financial firms, the rest will follow. Global finance moves in search of lower friction, stable rules, and credible local partners. Malaysia is building all three, and that is the real reason to watch this market now. Key sources for factual claims used above: Tun Razak Exchange, TRX, development details and role as a financial district. Malaysia's leadership in sukuk and Islamic finance rankings. Bank Negara Malaysia digital bank licenses and the 2022 award of 5 licenses. HSBC and other global banks' presence and investments at TRX. Tax incentives and corporate incentives overview for Malaysia.